Hello and welcome to Young Turks, India's longest-running show on startups and entrepreneurship. We are 17. You are, of course, watching our Budget Wishlist special. I'm Shireen Bhan. The run-up to the interim budget 2019 is also the season of wish lists. While the angel tax has caused an existential threat of sorts for startups and angel investments in the country, and it's dominated most of the conversations, both investors and startups are hoping that interim Finance Minister Piyush Goyal puts this issue to rest on the 1st of February. Will he do that or not is the big question. Many also anticipate that the government will boost its flagship schemes like Startup India and Make in India, but sectors like health tech, agri-tech and fintech may also be at the forefront of budgetary attention. To get clarity on what startups and investors really want, joining me on the program, founder of the GSF Accelerator, Rajesh Sani, joins me here in Delhi. Rehan Yar Khan, managing partner at Aureus Venture, representing IVCA, or the Indian Private Equity and Venture Capital Association, joins us from Mumbai. And from Bangalore, Rahul Garg, founder and CEO of Moglix, a B2B industrial goods online marketplace, and Ram Subramaniam B, co-founder of Blackbuck, an online marketplace to book a truck for intercity B2B freight. Gentlemen, appreciate you joining us here on the program. Let me get started with angel tax, because that, of course, is the most contentious issue. The hope is that perhaps interim Finance Minister Piyush Goyal will take up this issue and maybe axe the tax. That is the big hope, but will he deliver on that is the question. On the 4th of February, the DIPP has called another meeting between startups as well as the CBDT and itself to try and untangle some of the pending issues that the Jan 16th circular issued by the DIPP has not been able to address. Rajesh Sani, let me start by asking you, angel tax, the single biggest issue, do you hope that it will be axed this time around, or is that too much of an ask?
Absolutely. I think government can and must abolish the angel tax. Not only angel tax, they must also quash all the notices that have been sent to startups for recovery of angel tax. It's just not acceptable. And on one hand, we have such a bright future in Startup India. On the other hand, one wing of the government is persecuting young startups and investors alike.
Okay, so abolish the angel tax and quash all the income tax notices that have been sent out already. That's the wish list there from Rajesh Sani. Rehan Yar Khan, let me come to you. How much of an issue does this continue to be? The government believes that they have been able to address most of the outstanding issues substantially through that Jan 16 circular that was issued, and more is likely to come in the second installment as and when the DIPP meets with startups on the 4th of February. But what would your expectation be from the budget?
Shireen, the issue has been that DIPP has kept rebottling this angel tax, and it hasn't improved. So even if you look at the Jan 16 circular, there are a number of issues with it. One is all the people who have received notices so far, there's no relief to them, right? That's the largest issue. The number two issue is that the way it's worded is that it doesn't look like much relief is possible going forward.
Okay.
Because all it seems to do is shift the registration process to DIPP from from CBDT.
Right.
Right. And there are a number of other conditions, like friends and family have to have a certain net worth. Even that 10 crore rupee exemption has a lot of ifs and buts with it.
Yeah.
Conditions attached. Then there are issues like, for example, if an angel invests in a later round, right, beyond that 10 crore. I mean, let's take an example of Sachin Bansal having put in whatever he was supposed to have put in, right, $50 million, $100 million into Ola. Now that can also be construed as angel money, because he's not a fund, he's an individual, right? So even later round investors, if they are not funds, are subject to angel tax.
Okay.
Right. So the whole thinking is flawed. That if a fund invests, it's fine, but if you invest at the same price, then it's not fine, right?
Okay.
So they haven't really addressed it. They've kind of repackaged it, and we've all euphoric when it first came out, but then the next day when we read it carefully, we realized that hey, this is not really going to get us very far.
Yeah.
So what we at IVCA have done is we have made a set of recommendations. We have said, ideal case scenario, you go and you scrap 56, right? Now, let's say you're unwilling to do that for whatever fears that you have.
Yeah.
We have given two additional recommendations on top. One is that we have said that up to 10 crores must be absolutely exempt.
Okay.
No questions of what is your net worth and those kind of things.
Okay.
Because, I mean, are we trying to catch big frauds? Are we trying to catch small frauds, right?
Right.
Even if you're trying to catch a fraud. So let 10 crores go. Let it be like, duty-free imports which come in your baggage.
Okay.
So that is one recommendation we have made. The second recommendation we have made is that if you are co-investing along with a fund, right, and the fund has set a certain price, then that price is a good price.
Okay.
So you should not be questioned thus coming in. See, the whole fear is that price correct and is some hanky-panky happening as a result of that. But, if a SEBI-regulated fund has come in and has set a price and said, okay, this is 100 crores, 1,000 crores, whatever crores, and you also participate as an angel, then you should be fine. Right?
Okay.
So these are the two things we've asked for if you're not willing to scrap 56.
Which looks like a tall ask at this point in time. I don't know whether the government is considering the possibility of scrapping 56. If it happens, it's going to be a big boost for the startup ecosystem, and it will bury the ghost of this controversial angel tax once and for all. But as we've been pointing out, there have been several circulars. As Rehan and both Rajesh mentioned, it's really been repackaging, rebottling old wine in new bottle. So let's see whether the government actually bites the bullet and scraps 56 or takes forward some of the IVCA recommendations as mentioned by Rehan Yarkhan. Let me go across to Rahul Garg now. Rahul, forget the angel tax for a moment because it's already dominated a lot of mind share and mind space. Outside of that, for the benefit of the startup ecosystem, and let's be clear, the budget can only provide very little support. What needs to be done is outside of the budget as well to provide a much more conducive environment, to deal with filing of patents where we lag far behind China, regulatory issues outside of tax. So what else would you like to see, not necessarily linked only to the budget?
Okay, so firstly, I think last 3 to 5 years has been very interesting because if you look at it from the few index which moves the country primarily. So first is ease of doing business. Second is introduction of GST. Third is the entire move towards digitization and make in India.
Yeah.
If I look at all of these three changes that have happened over the last few years have fundamentally triggered the entire B2B ecosystem, whether it is in terms of distribution, whether it is in terms of supply chain, whether it is in terms of financing, to be reimagined and thought through with the lens of one country, one tax.
Right.
And that I think is a fantastic momentum that has been generated.
Right.
Now, there are a few things that we need to keep in mind. I mean, why startups is important. I mean, if I look at few of the stats now, startup as an industry, we can look at over the next 10 years, we could be generating anywhere north of 50 million plus jobs and impacting directly or indirectly the lives of 500 million plus people.
Yes.
Right? That is the sheer amount of impact startups can create and with the innovation they are bringing in. There are two things essential for startup ecosystem to flourish. One is access to capital.
Yeah.
And today the access to capital in India is still fairly small and can grow by 10x.
Right.
And that is from angels, VCs, and let's not forget debt access from the banks.
Yeah.
Because that is also an instrument which needs to be available to the startups. So we need to continue to have the policy framework as well as tax framework which enables more capital to come into the startups for themselves. And the second aspect is how do we introduce capital efficiency for startups to operate in. And we have done some of the changes that have happened around the tax from the income tax assumption at a company level that have been introduced. But I would also go to the extent that there are opportunities for us to think about how does the cost structure of a startup can be optimized further, whether it is in terms of people working in startups getting opportunities or incentives to work in these startups and having lower income tax liabilities around
That's an interesting one. I would love to see that fly. I'm not sure whether that is going to gain any traction. I think the one thing that the startups and other companies in general have been pushing may not find favor in this budget, but certainly is something worth looking at is removing the taxation on ESOPs. And I think that's been a long-standing demand as well. So I don't know whether it'll get addressed in this budget or not, but certainly something to look out for. But, Ram, let me pick up on the points that Rahul mentioned there, both in terms of access to capital as well as capital efficiency. And if we look at access to capital, there was with much fanfare the 10,000 crore rupee fund of funds for startups was launched by the government. Not too much we have seen happen on that account. I know Rajesh has been recommending that there be a $100 million fund to basically enable accelerators to get on with doing the job. What is it that you would like to see on both these fronts, access to capital as well as capital efficiency?
Yeah, I think there are lots of innovative ideas out there, and access to capital has been a challenge. Foreign capital has become very important for the startups to flourish, whereas there is quite a bit of capital that could be made available within the country itself. So, government stepping up and accelerating the initiatives in this area, it's going to be very, very important. And definitely just coming up with a certain framework around these aspects would also make startups more responsible around the efficiency related aspects in terms of how prudent they are towards capital deployment and so on. Yeah. So lots of areas to be still intervened by the government, and transformation is required in this area, Shirin.
Since we're talking about sunrise sectors and what we are seeing, a pain point that you've been trying to address through Black Buck, specifically to be able to give a shot in the arm to the logistics industry, to more organized players in this sort of space, what more would you like to see and what more would you expect?
Sure. Shirin, while there could be lot many areas regarding budgetary allocations and so on, specifically it is also time for us to talk about multiple policy frameworks, and especially in the road transportation area there are still quite a number of interventions required from the government side. While the government has been pushing the agenda on, say, dedicated freight corridor or any other projects, one important aspect that has been pending for quite some time in road transportation is a policy around standardizing the commercial vehicles. Today, India has multiple different types of vehicles, and these things lead to a heavy loss on the productivity side. And government should immediately look into this aspect and really come up with a policy around standardizing the vehicles. And also moving towards larger capacity vehicles as a country, it is really important for us. Western countries have really followed this and they have reaped in the benefits, and it is important for India to actually move towards larger capacity, standard larger capacity vehicles. That's one area. The other area, though the implementation has been done in the area of, let's say, check post removal and so on in the country, it is still not very effective. Still stoppages do exist at various state borders, and government has to, come up with a clear policy to immediately eliminate all these things so that the seamless movements could be ensured across the country. So there are multiple areas like this. On the digital initiative side, e-way bill has been a welcome change, but a major flaw as per our view is not closing the e-way bill. Even today, we actually hear a lot about misuse of e-way bills. So it is important for the government to come up with the systems to close the e-way bills so that it can be taken as an important documentary proof for payments and even working capital financing, which the industry needs to a great extent. And also just expanding the e-tolling network, not just with national highways, but also moving towards state highways. It will actually move the larger adoption. Currently, the adoption is very poor in e-tolling. And one major reason is also not, the state highways not being.
And I want to come to both Rajesh and you on the issue that both Ram as well as Rahul raised, and that is access to domestic capital. I mean, we keep talking about the fact that Indian startups are now owned by Chinese companies and are owned by, US-based funds and so on and so forth. But the fact of the matter is, how do you encourage domestic investment into this sector? Rehan, I'll start by asking you, what is it that you would like to see in order for us to be able to spur that?
So Shireen, I'll get into that, but one slight correction I want to make over here is that actually the 10,000 crore fund of funds by the government has been extremely effective. A very large portion of that fund has actually been given out to venture capital funds, and that fund is being used to anchor venture capital funds. So that 10,000 crore fund is well on its way to creating a 40 to 50,000 crore domestic venture capital industry.
Okay.
So that has been an extreme positive, and it is going extremely well.
All right.
So I definitely want to state that. Coming to the whole issue of capital, the domestic industry is going to take a certain amount of time to develop. It is fairly nascent. So if you look at the $29 billion of capital that came to India in the last 3 years, 2016 to 2018, out of that only 600 million was domestic, right? But that does not mean that Indian founders, that these are becoming Chinese-owned, American-owned companies. Even if you start looking at it legally, right? So FEMA has a definition that control means majority of the board is non-Indian citizens.
Sure.
Right? So even if you start looking at that position, these are not exactly foreign controlled companies, because a lot of these foreign funds have Indian directors, right, at the end of the day. And they are only providing capital, fairly passive capital. So one has to be very careful to not say, these are becoming foreign owned companies.
Right.
They are certainly Indian owned and Indian controlled companies. Now coming to the question of what can be done for domestic capital, a few things, in our view at India Venture Capital Association. One is that we think that there should be tax parity between exits or in private, private exits to that of public exits. So currently it's double the tax rate, right, for long-term capital gains.
Yes.
So if I'm playing the stock market and I make an exit long-term capital gains, I pay 10%.
Right.
If I do it on the private side, I pay 20%. Now that is indeed ironic, because the money on the private side is all primary capital. This is capital which is going in to help build companies.
Right.
Whereas the money on the stock market is secondary capital, right? It's not going to the companies. So if anything, it should be the other way around. But at the very least, it should be, there should be parity between the two.
Okay.
So that is I think one key thing. The second thing is that when Indian investors invest in funds, the fee that the fund charges is not allowed to be set off against expenses. So capital gains is taken on the it should be on with the fee set off, right, which is allowed in mutual funds but is not yet allowed in AIFs.
Okay.
So I think that is something they can very easily correct in the budget. I'm sure it's just something which has escaped them, right? Then you have the whole issue of this section 42, which angels are saddled with. So there is a law which says that if I send out a deal to more than 200 people, then I am a stock market, right? Which is kind of a very, very kind of illogical law. So that has to be fixed, and all these angel networks have now been getting notices because their membership, because the angel ecosystem is thriving in India. Yeah. So all these angel networks are more than 200 people, right? So now they're all getting notices saying, hey, you are the Bombay Stock Exchange, which they're not. Okay. Right? So that has to be fixed.
Okay.
Yeah, so these are some of the things we think can be used to spur domestic capital.
All right, so 3 specific recommendations there on how we can spur domestic capital coming in from Rehan. Rehan, just on the fund of funds, the allocation was 10,000 crores. My understanding is that, money has been committed to about 30 odd AIFs and about 170 startups. Can you give us more information on how much capital has been allocated?
So from what I understand, Shireen, that the 10,000 crores is meant to be dispersed over roughly 7 to 10 years, right? There is no capacity for the venture capital industry to, for example, absorb all this 10,000 crores in 2 to 3 years.
Sure.
And create go and raise another 40,000 crores from other sources. Okay. Right? A, they can't do that. B, there isn't that much deployment to be made, because remember this fund of funds is only for seed stage capital. There is a cap in there that it cannot be used for companies which earn more than 25 crores turnover, right? Okay. So it cannot be absorbed. So if I'm not mistaken, approximately 2,500 crores has been dispersed so far, which is pretty much on target with the 2-3 years which have passed since it was announced.
All right. Let me get Rajesh. And Rajesh, you said that you don't agree there with Rehan on this specific issue as far as absorption is concerned. Yeah. And what else would you recommend?
Yeah. So look, capacity has to be created. People ask me, Rajesh, why don't you do 200 startups like YC does in a year? When 200 startups of YC go out to seek funding, there are 30,000 angel investors waiting for them. There are 3,000 VCs waiting for them. There are 1,000 family offices waiting for them, and at least 500 corporates who have set up corporate VC funds waiting for them in Silicon Valley. What do we have here? We have barely 300-400 active angel investors, less than 100 VC firms, I think 10 or 15 active family offices. Now, we cannot create or compete with China or with the US with this kind of money support. That means government has to actively get angels, more angels, to put more money to support more startups. It has to allow for formation of at least 1,000 VC firms here. So if you say, okay, we only have 30 VC firms, we're going to only put 2,000 crore in them, that's the wrong way to look at it. We have to allow newer VC firms to come in, and many of these angels can become VC firms. We have to allow corporates to form VC capital, VC venture firms. We have to allow more family offices to fund money into not real estate projects, but into VCs. All of this requires incentivization.
So what kind of incentives?
It has to be tax incentives, right? There was a time when mutual funds used to get tax incentives. Why cannot we give similar incentives for these kind of pools to come into venture? Venture is the riskiest form, but it creates maximum number of jobs. It's proven. There's no debate. Like if you look at last 5 years, venture-funded companies have created the most jobs. Banks have reduced jobs. Telecom sector has reduced jobs. So infrastructure and venture-funded companies are the only two places where you're going to create jobs. So why cannot we give incentives? Right? It is possible. It has to be incentivized. Otherwise, capital will not move. Right? So government has to take a leapfrog here. And not small steps.
All right. So let me come back to Bangalore and get Rahul and Ram back in. And Rahul, I'll start by asking you, outside of what the government can or cannot do or should not do to nurture and alleviate some of the pain that startups are faced with, what would you like to see happen in 2019 outside of the budget to ensure that we continue to build on the current momentum?
So I think if we look at outside of the government infrastructure and the policy infrastructure, really speaking today, I talked about two things. Continue to increase access to capital and continue to bring capital efficiency. These are two things that definitely we need to continue to do. I think one more area which is very dear to me is entire digital transformation of many of the core sectors that have existed in the country. We work very closely with the manufacturing sector, and we have been on panels, whether it is talking about electric vehicle mobility, whether it is talking about how do we compete on steel with China and so on and so forth. I think what we need to do, both as private players and some of these organizations in the older sector, so to say, to start coming forward and think of technology as one of the major drivers of how they can compete in global setups, whether it is global supply chains, global manufacturing, global healthcare. Because we have kind of, even from a startup ecosystem, being very much focused on startups which are catering towards India consumer or India businesses, right? 80% of the startups today are placed in that category. And I think there is a much larger opportunity that lies ahead to start to evolve towards an ecosystem which is thinking global, both from startup perspective, but also from each individual sector perspective.
Absolutely. Well made point there, Rahul. Ram, I'll give you the final say. You've given us a long list of recommendations that you would like implemented, but also a crucial point. We were talking about job creation and skills. That's another important aspect that that industry needs to focus on. Your key recommendations.
Yeah, sure, Sharon. So I already talked about certain important aspects. Adding to some of those points, definitely, on the tolling side, basically linking it up with the e-way bills, and the e-way bills getting linked up with the Vahan and Sarathi data infrastructure as a part of digital initiative. It will go a long way in actually having a foolproof system all across. And it would also remove lots of other checks, unnecessary harassment that happens on the road today. So this is very specific to my industry, but it's a good chance for us to actually voice this out. So that's one area that we would like to see. And also, as Rahul was pointing out, outside government, the corporates and the private sector can still do a lot in terms of improving efficiencies across, which would just go a long way in actually making India stronger on the manufacturing side, reducing the overall cost and improving the efficiencies. One important area in our sector itself, the private companies coming forward to actually start treating drivers really in a respectable manner, investing in the area of training for truck driving schools, and also very importantly the OEMs coming up with more driver friendly and safer cabins for the trucks, which will ensure driver safety, and also investing in telematics in trucks for driver safety. These areas would actually potentially avoid a driver shortage situation we may face in the future, and that's something that India cannot face as a growing country.
All right.
So these are some of the points I would like to highlight.
Yes, Rajesh.
So GST is a great instrument. It's in the best interest of the country. But look at startups. 10,000 startups get formed. 90% get killed within few years. When they start, the founder is doing heavy-duty work. He doesn't have enough resources. But GST compliance is very heavy-duty work.
Tedious.
Can we consider a GST subsidy for startups for 2 to 3 years, subject to a limit? Most of these startups are doing revenue of 1 crore, 5 crore, 10 crore. 3 years GST subsidy. So it goes a long way to do ease of business.
Carving out for specific sectors and for specific...
irrespective of sectors.
Okay. Well, no, I'm just saying that SMEs have been asking for some relaxation. Now you're saying startups. I think, the government will have to weigh this very, very... And this is, of course, also the remit of the GST Council. Rehan, final word from you. The number one thing that you want the government to focus on?
Number one thing I would say in this budget, in addition to the angel tax, which is now moved to DIPP, is tax parity between public markets and private exits.
All right, gentlemen, let's see how much of this is in fact translated into reality in the interim budget, or perhaps in the full budget when the new government comes to office. But thanks very much for joining us and sharing your thoughts and your recommendations on what needs to be done to encourage and continue to build on the momentum that India's startup ecosystem is seeing. For now, from all of us here, goodbye. Many thanks for watching.